Hello, everybody. It's Tortoise Investing coming at you today with 5 dividend stocks from 5 different sectors that you can buy and hold forever. Now, before we jump into the numbers with all of these, if you could quickly please hit that like and that subscribe button, I greatly appreciate it. If you're a new subscriber, go ahead and hit that little red button there and comment down below a little smiley face so I can welcome you to the 268 that have already done so. Join me on this investment journey. Now, without further ado, let's go ahead and dive into it. First up is MSCI. This is something I've been watching for a while, and it is now below 500, and I am loving it. I am going to buy this as much as possible, as much as I can. I got in at 480, so if I'm going to be able to dollar cost average down on this thing, I am going to be loving it. It's got amazing revenue, EBITDA, cash flow, net income, EPS growth, everything. This stock is amazing. It's got a dividend yield of 1.14%, the payout ratio of 45%, so plenty of room for growth. It's got a free cash flow yield of 2.75%. So if we take a look here, they do got some debt. Their debt's $4 billion. Their EBITDA is 1.33. So again, they've got some cash on hand and stuff, so this is nothing that they cannot handle. Let's take a look at the dividend stats here. So they have been growing. I don't know why their 2023 is not in there yet, but they have been growing their dividend over 20% over the last 10 years, and that is absolutely bonkers. And they have a return on capital employed of above 20% as well from 2017 on. This company is just firing on all cylinders, and I love me some MSCI. Next up, for those people wanting an industrial stock, got some Union Pacific Foreigns. It's got a dividend yield of 2.62%, a payout ratio of 46%, free cash flow yield of 4.5%. So with Union Pacific, I like this railroad better than the other ones. They recently had a big change at I think the CEO position, so they're going to try and get things back on track. They've got some debt as well, $31 billion. Their EBITDA is $12.5 billion. That falls within that 3 times range that I like to keep things at. Their EPS is growing, which you like to see. I know the revenue's been kind of flat, but that's okay because the revenue's been flat, but the free cash flow and their EPS is growing. So very nice, very nice. They have been increasing their dividend by a rate of 12.23% over the last 5 years. So again, another really strong dividend grower. And I believe anything under $200 is pretty good for Union Pacific. They've been doing some share buybacks as well. I'm pretty sure MSCI has been doing the same way. Yep, slowly but surely been doing some share buybacks. But yeah, none of this is financial advice. This is all just entertainment and educational purposes only. Just got to put that out there real quick. Next up, from the healthcare sector, we've got some ABBV. ABBV recently had a drop, which might be a good entry point and buying opportunity for some people, and you want to add a healthcare to your portfolio. So they got a dividend yield of 3.85%. This payout ratio is something I'm gonna have to take a look at. 'Cause I don't know. That seems kind of iffy there. Give me just a second. Actually, this is live doing this right now. Dividend. We're going to take a look through dividend.com, see what's going on here. That's what I thought. All right, payout ratio 53%. That looks a lot more accurate. But yeah, 3.85% dividend yield. They got a free cash flow yield of 9.11%. Revenue has been increasing. Free cash flow has been increasing. EPS is growing. They do got some debt of $59 billion, but their EBITDA is $19.89 billion. Again, falls in that 3 times range. I don't like my debt to be 3 times more than my EBITDA when it comes to my portfolio, to my stocks that I like to look at. So they've got a return on capital employed around 10% or so. They had that hiccup in 2020, but pretty much everything did. So yeah, ABBV, I know that a lot of people are afraid because I think it's their big moneymaker thing that they had the rights to. Recently lost their licenses to. I don't know the exact but there's going to be some generic versions of that med made now. But they have some new meds that are be coming out that's definitely going to help them keep that revenue and that free cash flow going. Now, the dividend has been growing at an average of 9% over the last 5 years. So again, pretty good. Nothing to complain about there. A growing dividend is a happy dividend in my eyes. Now, next up, for those who want a consumer, we got TJX. TJX is a sleeper in my eyes. I think this stock has a strong future ahead of it. It's got a free cash flow yield of 2.9%. It's got a dividend yield of 1.7% and a payout ratio of 39%. So plenty of room for growth still to come from this one. Now, the thing with this one is it has more cash than debt on hand. I love to see that. And this revenue, EBITDA, everything with this just looks amazing. EPS growth. They had a hiccup last year. Last year had a technical recession. If you go by the negative GDP that we had for 2 quarters in a row, but they immediately got things back on track and ticking strong. They're doing buybacks slowly but surely. Return on capital employed is above 20% and has reliably been that way for a while, again, except for the hiccup from last year. They've got a dividend growth over the last 10 years of 19.2%, over the last 5 years, 16%. So again, a growing dividend is a happy dividend. TJX, I've got my eye personally on this one, and if it dips into the low 70s, maybe the high 60s, I'm going to look at opening up a position myself in this one. I really like TJX. Next up, my favorite REIT of ever, Vici. Oh, Vici. It's got a dividend rate of 4.62%. Great compounder. We don't pay too much attention to that payout ratio because when it comes to these are REITs. When it comes to REITs, you want to look at the FFO. So we're going to go ahead and take a look at the Vici FFO. And I looked this up through NASDAQ. And we should be able to pull that up right here. So Vici came out with 0.53%. And 0.53 per share, and their estimate was 0.52, and it compares to their FFO of 0.44. So that's their funds from operation. Again, they delivered with surprise 2%. So again, everything with Vici is ticking in the right direction and ticking strongly. I love this REIT. This is one of my biggest holdings in my portfolio. Speaking of that, as you can see here, just take a very quick little look at the portfolio. These are my positions and the allocation percentages. I will go over this a bit more in depth through Cultrum Friends at a later date. But yeah, that is 5 dividend stocks from 5 different sectors I feel you can buy and hold forever. And until next time, see yous.